Thank you very much. And hi, everyone. Thank you for joining us. I'm looking forward to our discussion today on stablecoins, one of the hottest topics in finance right now. I'm joined by a group of industry leaders. So stablecoins are no longer a niche, futuristic novelty, right, but a legitimate financial instrument. And globally, more than $230 billion worth of stablecoins are in circulation, the largest issuers being USDT and USDC. And when considering payment volumes, more than $6.3 trillion in stablecoins payments were settled in the last year, equivalent to 15%, about 15% of global retail cross-border payments in 2024. We see companies like Ripple, Circle, and Paxos, as well as traditional institutions like Visa, MasterCard, PayPal, leveraging stablecoins to transform cross-border payments and other financial services. So therefore, we can conclude that stablecoins are becoming an increasingly viable alternative to traditional cross-border payments. And let's hear from the panelists. What are some of the benefits of using stablecoins as compared to traditional system in cross-border payments? So maybe let's start with you, Jeannie.
Hi, everyone. And before I go into the work part, kudos to everyone that this is day 5 for most of us on this panel. So we're still alive, and we'll try to get out as soon as possible. But my name is Jeannie. I'm based in Singapore. I'm head of APAC for Paxos. You may know us as USDP, USDL, PaxG, which is a tokenized gold product, and most recently we have USDG, which is what we call the global dollar network. So I feel like, to your question, how do I feel that stablecoins are going to be used in the future? I think it's a very simple answer. The financial systems have disappointed a lot of people, especially for the next billion people that's going to be in our world. They are the forgotten group of people that we ignored. So this is where our industry comes in and make the best out of it, and through collaboration through these leaders, I think we can make money move faster, cheaper, and more efficiently.
Great, well that's a really great introduction. Good afternoon, everyone. My name is Amy. I lead the APAC business for Fireblocks. For those of you guys who may not know, Fireblocks provides secure wallet infrastructure for our 2,400 institutional clients. These folks could be your 2 men and women in a garage trading cryptos, all the way to some of the largest financial institutions in the world. When it comes to stablecoins, actually, and it's particularly how folks are using stablecoins, I think we're in a really unique position given we see so many segments of customers, payments clients, corporates, in some shapes are using stablecoins already today. And I think you asked the question around like, where do we see this future of stablecoin could be? I think number one would be around folks that currently have a working capital constraints where money slowness is causing them loss of opportunities. So think shipping companies, e-commerce platforms, and folks that really need to make sure the money turns around in a really rapid pace, and that T+2 cost them infinitely more from T+0. So that could be a segment of folks. We're also seeing just organically folks who want to get US dollar, right? I think you cannot ignore the fact that a lot of these stablecoin adoptions has been led out of Latin America and Africa, where folks in those countries generally will want to get exposure to US dollars, and that's really a strong use case for them as well. And finally, I think maybe we'll get into a little bit on in the discussion, stablecoins are being used as the medium of settlement across businesses, right? Where they're not really saying, I want to hold these stablecoins, but I'm using it for 2 entities to communicate with each other and transfer of value, which is really unique and a growing use case that we're seeing in the space, and it's really exciting to see that happen.
Thanks, Amy. Hi, everyone. My name is Tianwei. I'm one of the co-founder and CEO of StraitsX. So StraitsX is one of the earliest issue of a non-US dollar stablecoin out of Singapore, which is XSGD, the 1-to-1 backed Singapore dollar stablecoin. And most recently, XUSD, which is the 1-to-1 backed US dollar stablecoin that recently got listed in Binance about a month ago. So both stablecoin are very happy to share that are in early compliance and recognized by MAS for the upcoming stablecoin regime. But maybe to answer the questions, we'll be putting on another hat of mine. So I'm also the co-founder and CEO of FAST and XFirst, which have been a major regulated FI that works in this payment space across Singapore and Indonesia for the last 10 years. And the space that we are, applying what the two ladies have just added on, maybe more specifically are on the cross-border payment use cases that we are actually actively involved on a day-to-day basis. So maybe I'll bring back to the context of the faster payment, quicker settlement side into an example that a lot of us will probably be more familiar to, right? When you buy a coffee today at at Starbucks or one of the local coffee branches over here, you use your credit card and make a payment. You expect that payment to be instant, which it is. However, usually it's a two-part flow, right? First is a communication layer with the EDC and Visa, and you get a coffee and you're good to go. But settlement between the Visa network, the issuing bank, and actually the merchant might be a 3 to 7 days process, which is where the problem that lies in the traditional payment system. But with stablecoin, what we are seeing here right now is that communication is also a settlement, right? Because when the blockchain stablecoin is being transferred, the end result is the stablecoin is already received as finality in the address of the merchant. And we're no longer talking about just a dream and vision over here, right? Since last year, we have worked on this together with Grab and Alipay International of a live product right now that if any of you travel to Singapore today using any Alipay Plus powered app like Alipay China, Hong Kong, or Touch and Go Malaysia, you can scan and pay at any Grab QR code. There's about 40,000 Grab merchants in Singapore today. And to you, this is Grab Pay, and to the merchant, to you, this is Alipay, sorry, and to the merchant, this is Grab Pay. But actually happening, what happens seamlessly behind the scene is every single transaction right now is being transacted and settled with XSGD, the Sing dollar stablecoin on a blockchain, which achieve what we have been discussing over here, because the main reason why the merchants like international players like Grab and Ali are willing to explore this is no longer a vision. It's something in reality, because the merchant will get settlement real time, there's programmability, and we get the kind of instant settlement that we have been talking about earlier on. That's my take.
Wow, you guys cover everything already. So should I summarize? So my name is Alice. I work for Nuvei. We are one of the top 5 global payment processors in the world. Per month, we process about 20 billion in volumes. And we pretty much like traditional finance. We service all of the Web 2 merchants and also Web 3 merchants as well. I manage the digital asset vertical for Nuvei for the whole APAC regions. I work with Web 3 project and exchange in order to enable the fiat collection for them with the card scheme or with the local payment processor. Or I work with Web 2 merchants who would like to use crypto as a payment or who would like to incorporate blockchain into their payment rails. You can look us up, like we have many products. So I would pretty much talk about the benefit of stablecoin at a very high level, 10 seconds. From the beginning, stablecoin is a very old concept, like a very long concept already. People want to have some fiat-backed token that can be traded 24 hours, and it can be liquid. And that was the original from stablecoin. At the very beginning, when stablecoin was set up, it was used mainly for 2 purposes. One is for criminal activities, at the very beginning, and the second one is crypto trading. And as it's evolved by itself, obviously nobody is using, not nobody, like less and less people are using stablecoin for criminal activities because we have chain transaction monitoring, so people are now focusing on crypto trading. And then we have some cross-border money movement as well. So people are using cryptos and stablecoins not only for trading, but they're also holding it for yield. Let's say with the Paxos stablecoin, for example, they are also using it for cross-border payment, just like what you're doing with StraitsX. And for Nuvei, we have a lot of merchants or clients, if you can call it, who are e-commerce that would like to leverage stablecoin or blockchains in the between to move the money cross-border as well.
Thank you. So thank you, Alice. So I think everyone of you talk about all the advantages, all the benefits, but I believe it's not a cure-all. What are some of the disadvantages or risks of stablecoins, such as depegging risk, and disadvantages like it's not achieving the singleness of money? Are you guys able to talk a little bit about that? So maybe Alice, we'll start with you, since we. Yeah.
With me?
No, Alice. Start with
Alice.
you.
Okay.
Yeah.
Cool. So I guess the risk I would tap in a little bit here would be security, because when you want to hold stablecoin, you need to have some wallet. Fireblocks, for example, then you need to know, okay, who is going to handle the security? Because smart contract can always be like breach. And for a traditional merchant, they don't know how to actually control this, or they don't even have any knowledge, like even selecting a provider, like who can actually do a smart contract audit. They don't even have any definition of smart contract. So that's one of the risks that I can highlight. Yeah, I leave it to Tianwei to mention it.
Thanks, Alice. I think besides security, I think another two major part that probably people are already seeing quite clearly is, first and foremost, not all stablecoin are created equal. I think that, like Alice had mentioned, there's a long history of having stablecoin, and we know there are market players out there, that without naming them, that all of them have a different context of the regulation that ultimately govern what is the asset that backs the actual stablecoin value. Maybe naming the one that's not so successful, we have algorithmic stablecoin, the Terra Luna one, that previously have caused a wide market loss in the gag because the regulation behind it was not actually defined, and to the consumer, they might not be able to differentiate the difference between the two. And that's why we've been working a lot of time and working with a regulator like MAS to clearly define what does a well-regulated stablecoin actually means. In this case, you have to be one-to-one backed by short-term liquid assets in the same currency of AAA and beyond. And that way we'll be able to give at least the consumer understanding of the differences in terms of a well-regulated one and how their rights will be protected. But another big part of this is also depending on the underlying banks that actually serve the stablecoin issuer here, right? Another example, we also know not yet quite far back that when a bank in the US went down, we caused a widespread DPAC against scenario in a well-known stablecoin issue out there. And this is again something that most consumer will not be thinking about day to day, right? To them, this is a token that they use, it's always one-to-one, but when that event happens, the needs of the banks comes in, and this is why, again, on our end, we try our best to work with the best bank in the world. So in this case, out of Singapore itself, we will be working with DBS, one of the largest banks in Singapore itself, and also Standard Chartered itself, where all the funds are properly safeguarded.
And I have to plus one on that because Tianwei, which is part of StraitsX, and Paxos, we are the only two companies that are part of the MAS stablecoin framework. So when it goes into legislation, there will be more people participating in it. But both companies are actually very well trying to influence and guide MAS through this legislation. And I want to basically double down on that point. So depegging is a real thing. Right, we have seen it in my competitors. When a bank goes down, to your point, Silicon Valley Bank in particular, I think this is also the reason why MAS is so conservative to the companies like us, and ensuring that if we want to have a USD stablecoin, we need to have the liquidity, and then we got to have reserve assets. And every month, I'm getting audited, right, by the third-party auditor to make sure that I have those funds securely in a Singapore bank like DBS. Huh?
Audited twice.
You audited twice? Oh, I got once. I wonder why.
Security control.
Security. There you go. But I think the good thing is MAS, while a lot of regime have seen MAS to be very stringent, but I think I understand the reasons why, because we're learning from what we see, the mistakes that people have made, and we're trying to come up with legislation that works for the world. So MAS is not only working with the both of us or both companies, they are also working with different legislation, regulations such as Europe, which is MiCA compliant, and also New York DFS, and also at the OCC level, at the federal level, so that you will probably see in the future a global mandate that is similar structure across the world when it comes to stablecoins.
So I think I have a contrarian view for many folks on the risks of stablecoins. Let's start with the fact that today the money you see in your bank account, it's not 100% backed, right? These are all done on tokenized deposit. So from a risk perspective, to be honest, if stablecoins were to become the de facto currency used by everything, our capital markets in the world will shrink by the multiple of 10x, right? So that's obviously risk number one. And if you are a bank today and makes money on earning interest or making loans and taking deposits, fundamentally stablecoins in its nature is against how you make money today. So which means actually folks in the industry and along the payment space, both banks and payment service providers, are looking at this new technology and saying, hey, like, how can I make sure that I'm defending my current way of making money? And which means as a result, the most common topic we're hearing folks are doing today is either the debate between stablecoin versus tokenized deposits, and or just other providers coming in and launching stablecoins. which means that if this is the industry that we will go on, you asked the point around like uniformity of money, right? What happens when there is 10 different versions of US dollar stablecoins, 5 different versions of Hong Kong stablecoins? Today, you are a consumer, if you're already struggling managing the cross-border flows from singular currency, like how does that future will look like when there's like so many different versions of it? And that fragmentation actually is a fundamental risk. And I think regulators and central bankers are noticing this as a potential risk and putting in policies in place to maybe potentially stop the flows of stablecoins. Like Mika is a really great example of what's happening in Europe. And if you talk to folks who understand the regulation and seeing what they're trying to accomplish, there's a clear, I think, argument to be asked around like, hey, does the world need 15 stablecoins? And does every single of these stablecoins need to be a different currency? And where does like a local currency stablecoin has value? And how do we make sure that when we're talking about stablecoins, we're just not talking about like the US dollar stablecoins, but actually like have some discussion around the rest of the currencies to make it really viable from a cross-border basis?
Thank you, Amy. I think that's really, really helpful. And I think you guys talk, this leads us to the next question on regulatory uncertainty. I think a lot of banks are hesitant to invest heavily in stablecoin technology due to persistent regulatory uncertainty. Do you guys see that changing in the near future? And if so, when? Like what, where do you forecast?
It's changing as we speak, to be honest. Yeah, I think 5 years ago, I was previously at Meta, and I launched the Nuvei wallet and the Libra network. I think most of you have heard it. No banks want to work with us, right? Fast forward, I'm at Money 2020. All of the people that contacted me on the platform came from banks. And I'm like, well, the tides have changed. They want to work with us. I think it's because the hype is not just hype anymore. There are true use cases of cross-border payments. There's true problems to be solved, and there's demand. Everyone's asking for it, and the banks know if they don't support it, they will lose out in the end because somebody else will win.
Yeah, I think regulation is really determined based on the election results from last year. Like I think we can all sit here and talk about local regulatory environments, but there's a clear change between the day Trump got elected and the day after, right? Like, and we were in New York at the time when this was happening. The day before, stablecoin is still the same stablecoin, and somehow, day after he comes into the office, everybody is now thinking this Web 2 to Web 3 is the hottest thing, and it's because ultimately what people expected the U.S. to do was to eliminate some of the hurdles that was put in place. One is coming up with a stablecoin bill. 2 is remove Operation Choke Point. But most importantly for the rest of the globe, because now people believe that there is no longer a prohibitive regulatory environment in the US, if you're a financial institution in Asia, you're no longer worried about losing your banking cross-border relationships when you go and develop something in digital assets. And that risk removal is a huge lift on why banks could then potentially operate and why regulators even to want to go and put in policies and sandboxes and to facilitate the learnings of this kind of flow, right? But that being said, I'll give you guys an example. In many countries, whilst they're still exploring all these different regulatory environments, a lot of places actually don't allow US dollar stablecoins, for example. Right? And in those cases, they're developing their own stablecoins, and actually the regulation is really fascinating because I think for a lot of folks, they understand stablecoins, the consensus, because of the liquidity that the US dollar stablecoin has. Meanwhile, if you're starting a brand new stablecoin in your local jurisdiction and currency, you're thinking a lot around like minting and burning mechanism, how do you get users to get access, because there's not this like organic secondary liquidities. So regulators actually approaching things quite differently than how, countries that is allowing US dollar-based stablecoin to operate.
Yeah, maybe to just add on to what Amy is talking about here. I think, first, we probably do not want to give, we respect President Trump, but I don't think that's all the credit of his turning point. But this has been a global trend for the last couple of years itself, right? Case in point, I think what Jeannie has been saying itself is that a lot of banks have been actively, some of the more forward-looking ones, like we just mentioned a few of them, like DBS and Standard Chartered or the SCBX, they have been already been progressing on that path for the last couple of years. First with small experiments, and now with a tap or toe in the water, but now they're actually fully embracing a lot of this itself. Some of the pilot that we've been doing with MES itself under Project Orchid have active involvement by the banks like Standard Chartered or DBS, trying to figure out how you can actually use like a concept of tokenized payable to balance their own treasury. And the good news is these are no longer just, again, pilots and vision. We're actually seeing them being production in the coming weeks or months, or even some of them like the Alipay Grab stuff that's going on is a live product itself. And that is the trend that we are already seeing. I don't think there's bank maybe in the region itself that's not already thinking or actually have done something so far. And that has been not just a day or they wake up in the morning, they decided to do it. It's probably a global trend that is actually happening over the last 3 to 5 years itself. And with that note, actually, again, going back to what Amy was talking about, like the vision, at least I see, and at least what we've been discussing with our local regulator is there will be a world with a lot of different stablecoin, right, for the same currency. And that will be the norm. And that's actually part of what Project Orchid has been talking about for the last 3 years. Kudos to MES for being forward-looking again. Together with us, we already talked about the fact that there will be a need for a singularity of money, and the whole concept is having a purpose-bound concept wrapper that wraps around a basket of different stablecoin, where they will be executing based on the programmable nature of it. And the most important part, if you are just to take away the gibberish and just give you the gist of it, is what you actually see right now with what Grab and Ali is doing. The whole end-to-end flow, the end user don't even know there's stablecoin being involved. And that itself is what we feel is the future, where this is really a back-end innovation. There will be a lot of solutioning that will be coming at the back to facilitate stablecoin to stablecoin swap, but that will be obfuscated to the end users. To them, they care about their user experience. When they scan or they tap, payment will go through, and that is the end goal of what we are trying to achieve over here.
Well, from my point of view, because we have a payment processor, we work with a lot of correspondent banks. We actually have a different experience. So the bank is talking to you all because you are the infrastructure. Right? You are building the framework and provide the infrastructure to the banks. But from the payment processors and payment acquirers, it's actually really hard for us to convince our correspondent bank that, hey, we are going to process crypto transactions. Would you allow it to go through or not? And the bank will be like, here is the long list that you have to supply the document to us. And it takes months for us to onboard a merchant. So the demand is there for the front end, yes, but for the back end infrastructure, we are still not there yet. That's one of the view.
Just quick one. Don't you think it's a good thing they actually have a long list for you? 5 years ago, they don't even know what you're talking about.
No, I mean, like, okay, well, the demand is there. As I said, the demand is there. Like, they have the, but having a long list, it's the bank. They always have a long list, but maybe the list is not even crypto relevant. It would be like ChatFi like relevant. We'd be like, it doesn't really like make sense. But we had a lot of demand and adoption from financial institutions into using stablecoins as a tool or a mean for them to move the money cross borders. And those, if the banks are not fast enough, then the financial institution or FI or PSP, they are going to take over. And that's the reason why you have a lot of demand and interest for the platform like you to, hey, I need to do this, I need to compete with the FI, and I need to compete with PSP. Otherwise, nobody going to use me for the money movement anymore, right? So that's just my different point of view, because I work for the upstream. So
I actually think it's really interesting point you brought up. Like someone explained to me that the payments game, right? You got one end, you have users or consumers, and then in between two consumers, there are many, call it PSP, system providers, banks, middlemen that ultimately is sharing the percentage basis point that the user, by the way, don't even know that they're paying, right? But they're all fighting over the tiny, tiny little bit of spreads. And that's why actually the PSPs were the first institution that really like adopted stable coins in a meaningful way, because the end consumer or merchant sees the benefit, and then the first layer service provider like the PSPs are the first to come on and to be able to deliver a solution. The second thing, which I think what banks started to worry about, is with stablecoins, no longer need to leverage a banking system to allow value of money to be transferred. And that is a huge, huge mentality change, because in the payments world, no matter how great you want to integrate the 500 APIs you have available and how to make that seamless, ultimately, somewhere towards the end, money needs to move from one bank to another bank.
Totally.
And with stablecoins, you don't have to do that, right? Which then changes the whole entire game of how payments or how money specifically is being transmitted between parties. And that's like a huge change mindset that I think now banks are realizing, oh, like, I want to be a part of that. I need to make sure I'm part of the flows. And they still need to have the risk controls, which is why they have a long list of questions, how they want to get involved. But they're like, at this point, the opportunity is there for them to go and figure out, how do I evaluate the risk?
There's a lot of FOMO over there for the traditional bank, I have to say, because there's so many neo-banks that we're actually having a lot of neo-bank requests to work with us, because we are an enabler of the payment flow. So if the traditional banks are not moving fast enough, then they're going to lose the market to neobank, to PSP, to FI, because the end users, again, they don't need to know so much about stablecoins. They just need to know, hey, I have like Brazil lira, I move it to Hong Kong dollars, and you do everything that you need to.
And also, we've been working with WorldPay, which is another payments processor, one of the largest ones in the world. They were looking at. I was a former WorldPay, so I have to like shout out them a little bit.
We are not competitive. We are rivals.
No, yes, we're partners. But we just signed them up as a global dollar network recently, and I've been on the side, the partner side, advising them on why the use case, because we also partner with Stripe in the US. We had case studies show that once you enable stable coins as a pay-in, let's not even talk about payout, as a pay-in, your digital services, your gaming companies, especially the digital content, the smaller ticket size, they have users from around the world they didn't even know they have fan base on. So I think having new user acquisition is something that a lot of the payment processors realize that, holy crap, we better get into this game before everyone else does. So WorldPay did, and you know what? If their traditional banks didn't want to do it, we refer new banks for them to work with, and now they're on board.
So if stablecoins and programmable settlement is the future, what are the building blocks? What are some of the building blocks needed today, from APIs to standards, to help institutions transition to a stablecoin-based infrastructure?
Maybe I can take that, because we spent a lot of time convincing folks. And instead of calling building blocks, I think you have to recognize first, like, understand how core banking system works in a financial institutions, right? It is like the most archaic, has not changed since the 70s, is stitched together by like a bunch of, Oompa Loompas in the back end that has been working on this, and it's complex, it cannot go down, and if you think about the importance of a core banking system for a financial institution, it's probably the most treasured technology that has a huge amount of oversight for. So if you think about the building blocks for folks, really number one is figuring out how do you make sure blockchains themselves communicate with the existing core banking solution, if possible. If not, how do I build a parallel solution that has easy integration? Like, that's like two things that is very, very important for folks to get to understand. And the other piece I think about is like auditability, right? Like, can I make sure that my blockchain infrastructure or my wallets is auditable? Can I make sure that it is had the same uptime as my core banking system needs to have? And how do I make sure that from a privacy, reporting, control, all of the things that I used to put into my core banking systems, I also would like to apply it when it comes to dealing with my digital assets. That is, I would say at a high level, what the building blocks that is needed for folks to get to an outcome where a bank's going to be able to process this. Now, for PSPs, it's actually a little bit different story. I think they also have really high technology requirements, and they also are very heavily regulated as operators. So from that perspective, one of the things we're seeing a lot of PSPs spending efforts on is like, how do I make sure that I am not processing transactions that are breaking AML KYC rules, right? Because they usually get into a lot of trouble when those things happen. So let's say if I want to offer pay-ins and payouts using stablecoins, how can I apply the same AML tools, which historically a bank would have done that for them. Now they have to do it themselves when it comes to stable coins.
Yeah, maybe to add on to the same thread, because maybe on a different perspective, because my background is more in engineering itself. I think given the fact that the whole entire infrastructure and why developers especially are so excited about stablecoin and blockchain is the open source nature of it, and it itself is being Turing complete. And with that, it means to say that the same principle that applies to good software engineering practice is now transferable, right? We're talking about design patterns here that have been governing a lot of the software development for the last 20, 30 years, right? And a good example of the most common example of that is the framework that people are used to. And by now, most of the folks, if you are native in crypto, you have heard of something called ERC standard, which is like ERC20, the most popular one, where everyone implements the same interface that's needed to basically allow your wallet to function, right? How do you receive a payment? How do you send a payment? How will the balance be showing up? That itself is the heart of what we call design patterns that will have to be continue being invested into, right? And to add on what Amy talked about in terms of compliance, is exactly the same use cases, which we have started with MES about 3 years ago under Project Orchid, where we have published our own ERC standard and open sourcing some of these compliance checks and this programmability that we talk about as part of the purpose-bound money framework that governs what are the regulations or the controls that's being put in place into each of these transfers, and is on itself maintaining the singularity of money itself. So only when those standards are being met, then the underlying stable can be unwrapped and be settled for payments.
So I work with a lot of FI and PSP to enable the stablecoins pay in and pay out for them as well, because we are payment processor. In short, to summarize what Tianwei and Amy just said, if you are building anything to use with stablecoin, you are on your own, pretty much. So you need to have your own wallet, you need to have your custody, you need to have your security, you need to know which chain to be used. You're on your own. You don't have a banking support. So you need to build everything from scratch. And if you don't have that knowledge or ability to build everything from scratch, you need to find a partner that have everything already built up in a network. And that network can be an orchestration layer. Let's say I want to use this stablecoins, I want to pay out in the other fiat, then that particular network and the platform already did all of the job for you. And that would be the gateway for the PSP and the FI to embrace the blockchain and stablecoin settlement. And that is something that we actually are building at Nuvei, that we build a network of all of the networks. And we are a part of the Paxos network, we are part of Circle network, we build a platform for FI and PSP can just plug in, and they don't even have to worry about even treasury management or even the payout.
Do you have anything to add, Jeannie?
No, I think the three folks have already added on the infrastructure side. I think one thing I add is I hear consistently with the big merchants that I talk to is I want to accept stablecoin, but I really don't want to apply for the license. What are our options, especially in Singapore, when the recent changes in the rules that says if you want to collect stablecoins, you got to apply for the digital payment token license as well. Not just the issuer, the platform, but also the merchant. So what they need to do now, we've kind of figured a way around it, is they need to work with an exchange like a Crypto.com or a PDEX in the Philippines, where they are going to be like the merchant of record model, right? And they will funnel the payment page, they will own that payment page, and they will fund the merchant directly versus having the merchant fund the consumers. So there's ways around it. Sorry, go ahead.
I'll give you an example. So you brought a really good point. And this happens actually in traditional payments as well. When a PSP wanted to enter into a new country, the first thing they do is to find a partner who can process either on and off ramps. And then they apply for the license themselves. And then they figure out how to get the license. And then they're like, we don't need you anymore. Like, this is literally the playbook of every single PSPs out there as they build out a large network as they go along. And it's not any different than how they enter into digital asset space. They will start with what we call crypto remote, where they say, I don't want to have a license today. I don't want to touch any of the cryptos. I want to take on the benefits or facilitate. Service provider, please help me. As they go in and go through this process, applying for their own license, because ultimately, the closer you are from point A to point B, the more margin you can charge. Every PSPs eventually will look to find ways to expand the value of their positioning of the value chain, right? Instead of just making money on FX, they're now making FX and the crypto FX and a spread fees and a gas fee and a little bit something on top. It's a very existing model of how PSPs operate. So then if you're a PSP sitting in the audience today, that is definitely the route that you should go down. But then if you are a licensed provider in the digital asset space that is working with the PSPs, I would ask myself, in 2 years' time, time, is that PSP going to be my client or competitor? Right? And that's something that's already happened in this space. And it's, we see a lot of digital asset customers, they're client of ours, they work very closely with existing businesses. And it's this relationship of like, hey, today you're my customers, but they're keeping an eye out. They're like, how can I innovate faster? Because ultimately the PSPs have all the customer base.
I can share another thing is everybody is building their own little Swift system.
Yes.
Everybody is building a little bit of Swift platform and network. Let's say the biggest challenge for stablecoin is the payout still, because you still have to have fiat in and a fiat out. So it's still 2 days delay, 1 day delay. How about we put everything in one platform? So yes, you can still have USD, but it's custody by us, right? Only when you withdraw the USD, then yes, you have to wait for like 1 day or 2 days. But if you want to have USD today, yes. So everybody is building a mini Swift network version of themselves, like every single BSP.
I think we have a few minutes left. For the audience, some of them might be from PSP, fintechs, even central banks. So what are your key takeaway or advice for our audience, on how they could start exploring stablecoin or how they can start scaling up as well?
I think we just need to start collaborating and not think of this as we're competing against each other. Because I'm dating myself, but when I was originally in the payments industry, there are like 100 payment gateways in the world. But then we go to Money 2020, we go to MRC, we're still friends. Because at the end of the day, there's enough business and volume to go around. And we're all fighting and lobbying against the regulator, the government, whatever that is. And I fast forward now, I feel like this is the same thing. We're part of a community, whether it's Circle, whether it's Tether, whether it's USDG, doesn't matter. Whether it's Fireblocks or other custody players, I think we're all part of this ecosystem. I encourage everyone to like collaborate rather than hate on each other and tear each other apart.
I would say if you were a traditional business that want to start with stable coins of some shapes or form, I think start with that customer demand. Like, are your clients asking you to move money faster and cheaper? And if so, which country do they want to do it in? And is stablecoin really the best rails for you to operate? Because in our world, and normally when we see clients, usually the ones who have customer demands are the ones who ended up having very successful opportunities, and it's not just becoming like a POC, right? So I think that's point number one. And then point number two, when it comes to getting involved, is you can start small, right? Like the reality is you can start building today, experiment, understand exactly what you need to do, go through the licensing rails, speak to the regulators, and be able to then go and launch a final product in the end. If you're waiting for regulation to clear up before you start building, then it could be a really long time, but then your competitor is already building on their own, and then they launch something before you will. And that's a real concern that we see folks have. To give you guys some statistics, our communications with PSPs have went up, I think, like 3x in the last years in terms of conversations. Our banking conversation went up by 5x in terms of last 6 months to now. So the level of interest and build, and these are not like, hey, I want to know how to deal with stablecoin. These folks at this point is like, hey, I'm looking to process $10 million a day. Like, I need to figure out a way to do this so I don't get fined by my regulator because the money's coming in, right? So that's the reality of where folks are at today. So if you're thinking in the audience, like, should I build, what should I do, how do I do it? My advice would be just to get started, and then you'll figure it out along the way.
Wow, okay. But given what the two ladies are saying, I think the first one, maybe from Amy's perspective, I think stablecoin is not a magic bullet. It doesn't, miraculously cure cancer or something along those lines.
I hope it does. That'd be great. That'd be great.
It'd be great if it does. But the big issue here should, again, goes back to the core principle, right? What problem are you trying to solve? Does your customer actually want it? But the good news here is that it's actually the cost of actually trying is actually very low here because of the nature of the first part, which what Jeannie is actually saying, right? Because the blockchain by design is open source, right? A lot of these things are easily accessible for a developer. I think from an engineering perspective, this is why there's so much excitement, because they can look under the hook. How does it work? Can we improve it without actually having to talk to anyone or being restricted by anyone? So that by design means to say that the cost of actually trying and maybe even failing is not that expensive. You don't have to invest years into your development cycles or months to get something out there and realize that your customers actually don't need it. A solo developer can do this over a weekend and actually just try to see whether there's traction. and actually experiment on their own, right? So those are the things that we should be looking at first. First, does your customer actually need this service? Stablecoin doesn't serve soft cancel. Not everything is supposed to be done this way. Like as an engineer, I always tell folks that decentralized by design is expensive. It's not efficient, right? Centralization is still the most efficient way to move money, just that there are other problems related to centralization that we're trying to solve in a different approach here. So you must identify what is your pain point and then make baby step, try it out, and see whether that's the right direction for you.
Okay, well, I would not call it advice. I would say suggestions. So number one, I only have two. Number one is if you are building something with stablecoin, please come talk to me. We have all of the tools you need. We can give you the roadmap as well. And number two is payment is a very, very complicated world. So please know the game before you join in. And execution is the game, like is a win. So if you don't understand the traditional payment network already, it's very hard for you to even get into stablecoin and crypto. So that's only two things that I would highlight.
Thank you so much for the discussion. I really enjoyed it. I think the audience have learned a lot as well. And thank you, and kudos to Tianwei for being the only gentleman on the panel.
I'm honored. Thank you.
Thank you, everyone. Hope you enjoy it. Thank you.
Thank you, Alice.